Today, folks, I literally leave for vacation and I get up, scroll into the stock market, and it is another day of pure calamity. So we're going to look at some of the data driving the calamity in the stock market, some interesting trends, along with the new investment vehicle that somebody suggested in my last video in the comments section that I think is relatively fascinating because I've never seen it before. It's highly related to high interest savings accounts, and it has been drastically increasing monthly payments. But first and foremost, the most intriguing thing on my vacation thus far has been that I want to try the Google self-driving Waymo cars. They are everywhere where I'm staying, and I'm actually shocked at how many I've seen just kind of cruising around that you can just book on your phone. But nonetheless, folks, let's just take a look at this because first and foremost, Goldman Sachs cuts the target of the S&P 500 by 16% today. And I don't know if that's the news, but it's the headline that seems to be driving a lot of people's fears continually in the market. But let's just take a look because the S&P 500 hasn't hit that recent low yet. Take a look at this because we're down to 3,693. But on the year to date, guys, we're just starting to retest these lows. So I'm really curious just a crazy day to finish on going into a weekend, because basically next Monday is going to be the moment whether we dive well below this last low or we just find a new bottom and start to rally back off of it. I'd love to know what you guys think. You think this is going to be the dead bear bottom basement prices of the S&P and the buying opportunity of a lifetime, or do you think we're just going to get continually slaughtered moving into next week? It's going to be funny to see what happens here, but just take a look at the Canadian side of the market. For those of you Canadian brethren out there, let's just take a quick look at the S&P TSX chart on a year-to-date basis, guys. Also retesting those last lows, but a little bit more above them than in the US. So we're only down about 12.98%, and we're about just 0.83% off the last lows that we were experiencing in the middle of summer. So again, it'll be neat to see. And I think honestly that the Canadian economy is likely to roll over and perhaps hit some new lows, just because energy is starting to roll over and the energy stocks are getting hit really hard. And because it's a huge component of the S&P TSX along with financials, that could be what drives us into newer, lower periods. But the other really fascinating thing that nobody talks about is the DXY chart, the US dollar, baby. I mean, you just printing. Look at that. The US dollar is up 8.5% today. That's crazy, guys. I mean, take a look at the year-to-date chart. And like, I think on a 1 year now, the US dollar is up something like, I don't know what the exact percentage rating is. So let's just compare it to the Canadian dollar. So 1 USD to CAD equals what these days? $1.36, man. Let's take a look at the 1 year. Yeah, look at that. From the lows over the last year, you would have made 10% just holding US dollars if you live in Canada. But putting that aside, folks, if there's one thing that I find very fascinating through all of this is the fact that I still think, and I am considering that, you know, it's going to be darkest before the dawn, obviously. And I feel like that's the moment we're living in. But the fact of the matter is as much as Jerome Powell likes to batter the market, inflation has got to be rolling over here soon and fast. Let me just show you, because if you looked at the stock market crashing today, it wasn't the only thing crashing. I mean, you go into the commodities market and look at this. Just look at on the day here. We've got oil and energy just rolling over dramatically. You got metals rolling over fairly dramatically. I know silver was rallyingly impressing. Like silver really started to rally back, and today it's down like what, 4%. Gold's back down to 1643, which is just staggering. I mean, we were scrolling through some of the agriculturals. Like, look at this. Wheat's down 3%. Soybeans, lumber's down another 5% today after already crashing miserably. At least orange juice is in the green. I don't know why orange juice is up, but it is. So that's cool. But yeah, I mean, oats, like food's rolling over. I mean, you look at industrials like aluminum. I mean, you're looking at palladium rolling over, a lot of those precious metals, seeing some green across the board, but mostly flat because a lot of these metals have already turned over. You got livestock has been relatively flat, some turning over, indexes, electricity. A lot of these things, you know, some of them depending on where they are in the environment, because like the United Kingdom, their electricity bills are going up. Obviously, they're dealing with issues in Germany and things like that. But still, all these energy prices, food prices, precious metal prices, all rolling over to a pretty dramatic extent just today alone, which is crazy, right? Let me read one of your questions here, and then I'm going to share with you the stock that I've been looking at that one of you shared with me yesterday on my video. But do you see Robinhood Brokerage going bankrupt in the upcoming crash? NGL, I'm really nervous. My net worth is only 23K, but it's all in Robinhood. Should I cash out, RH? So it depends. I don't know enough about Robinhood being a Canadian, but so long as it's in Canada, I guess we have SDIC insured. I don't know if is that similar to the US? Is it the same sort of thing? Basically, so long as the brokerage is insured for like $250,000, that means if they go under, you still get cashed out because it's like government backed. I would be a little bit more hesitant with the smaller brokerage accounts. companies here like Wealthsimple is probably comparable to Robinhood, but Wealthsimple at least is backed up and has major investments from like huge companies like Power Corporation, and huge financial institutions have a stake in Wealthsimple. So I think it's unlikely they go under. Robinhood, I just don't know enough about it, but I like brokerages could easily go under in this market because I don't know how much money Robinhood's making, but because it's a publicly traded company, I would perhaps dig into their books, see how they're doing. I know, I think the CEO of Robinhood was just doing an interview with Meet Kevin. So yeah, I'd be a little concerned. This is why I don't put all my eggs in one basket either, because even with the big financial institutions, if you put all your money with Lehman Brothers, yeah, I mean, you'd get some of that money back, but it would be one hell of a bitch to transfer, right? So I own, we have our money through multiple banks. In fact, I think I have money in like all the major banks, or most of them. Like I know I've got money with TD, Royal Bank, BNS. I don't have any money with CIBC, but yeah, I'm utilizing like 3 or 4 banks. Best thing you can do now. 20 grand's not a lot, well, it's a reasonable amount. I mean, 20 grand's a good chunk of starting change for sure. I mean, depending on how old you are too. But I mean, yeah, keep the 20K with Robinhood, and then perhaps go open up another brokerage account with a major bank, or major, brokerage account. Like, what do you got out there in the US? Do you have Interactive Brokers is a good one. There's a lot of them out there, but I'm sure you can find a major one just to start diversifying yourself. But nonetheless, let's get into this one stock. That is it really falls in line with what I've been trying to do with my individual savings accounts and these GICs, bonds, trying to take advantage of these guaranteed investment returns that have been driving up the US dollar value. But this is kind of focused for the Canadian side of the border, and it's highly related to the Canadian banks. Is somebody shared with me this Purpose high interest savings ETF, and I've never heard of this before in my life, and it's the first time I'm looking at it, and I want to show you something fascinating about this. But firstly, you cannot lose, from my understanding, money in this investment because it's just savings accounts. You give them money, they take that money, and they basically put it into the highest interest savings account with companies like CIBC. I dug through some of their financials and information, and they guarantee liquidity and all this stuff. I almost want to call them, and I'm going to maybe do a specific video on this, because take a look at this. So it looks like it's volatile, but it's not. I mean, these moves are like 0.24%, but this is because it's paying out every single month, and every month it pays out, it drops off. But because the interest rates have been going up so much, take a look at the dividend increases on this. It's been absolutely wild. I don't know if there's like a US counterpart for this, but it's basically called a high interest savings ETF or something like that. But take a look. Okay, this isn't the chart that I want. I want to find the one that shows you the increases on the dividend, because it's been going up dramatically. This isn't right either, is it? Maybe I should have pre-pulled this up. Come on. Is it dividend channel, dividendhistory.org? I can't get over like how much this dividend's been increasing. I guess this is a good little exemplifier of it, but just take a look at this, because the last payment was 0.128 cents. Before that was 0.09. If you guys can see this, I'll zoom in a little bit. 0.093 cents, 0.073 cents, 0.058 cents. This is monthly. Look at how dramatically the monthly payments have gone up from 0.058 cents to 0.128 cents. It's literally over doubled the monthly payment in just a 3-month period. Like, you know how staggering that is from high interest savings account? The current yield on this investment is now over 3%, and it's basically guaranteed. So until the entire world starts to shift and interest rates start falling off, I don't know how you don't see this as a really great way to cash flow 3 or 4% in a fairly secure investment. Now, I do want to dive, because I'm still curious about the liquidity. Like, for instance, as everyone starts selling it because interest rates start to turn over, then, do you get the pure liquidity? Who's buying the stock if you're selling it? Because the stock doesn't trade like a stock. It trades for a $50 unit price. So it's not really going up or down below that, just up as the interest comes in and then they pay you out. So it's kind of similar to a SPAC, but it doesn't have stock same equated value, where if everyone's buying it, the stock value goes up. So it's a really intriguing investment. I find it relatively fascinating. But outside of that, let's just take a look at how the rest of the markets are doing real briefly here, folks. And then if you have another couple questions before I bugger off, because I'm already getting reamed out that I'm working on vacation. So let's just take a look at the sticks here real quick on my watch list for stock twits here. Because man, oh man, like the volatility today, forget making 3%. You remember when we all were complaining about dividend yields just not being that attractive anymore, and people having to chase like really crazy investments to get high yields? That's no longer the case here, folks. Everything is paying out pretty absurd yields today. I mean, the fact that Google's below $100, not related to dividend stocks, but I've been kind of keeping an eye on energy stocks. Like, a lot of them are still up on the year. Like Enbridge, I think is close to being flat for the year, but ExxonMobil is still green on the year. But take a look at these banks. The Canadian banks have rolled over. The telecom is rolling over. The REITs, my Canadian REITs, rates. Like Ryocan's down 2.46% today. You look at Enbridge is down 4.4%, now yielding over 6 to 7% dividends. BNS, the bank, is yielding 6% right now. I mean, you know how crazy that is? Look at Algonquin Power's down to 1697, which is just crazy to me, yielding really high results. You know, I'm still waiting. I still think we're going to see a crash in consumer discretionary and staples like Pepsi, which are still trading at wicked high premiums. We're seeing Pfizer trade down quite a bit here. Verizon's trading down, Power Corporation. I mean, it's just discounts across the board, right? But this is everybody shifting capital out of the market and into these safer investments. But I still think this is a buying opportunity of a lifetime. I don't know when it's going to happen. I don't know if we breach new lows here, but the fact of the matter is all of this is driven off the interest raising environment, folks. And I know I'm a broken record about this, but I'm telling you, if commodities are rolling over this badly, eventually so will inflation. And if inflation and interest rates are what are driving the current market environment, that is going to shift. I can't see this going on for another 3 to 6 months. Ross Gerber, in that interview with Meet Kevin that I did a review on yesterday, he mentioned that he's really bullish on earnings come November. And I don't know what, November, December coming into the last quarter earnings are going to look like, but I'm just more intrigued by the interest raising environment and what the Federal Reserve is going to say. Because eventually they're going to say, hey, inflation is now under control. We no longer have to raise interest rates. In fact, we may have to lower interest rates and start being more accommodative to the market. And I'm so curious, so fascinated to see if the markets respond the same way they have to this news. Will they respond in opposite to that kind of news when we get to that point of the cycle? Like I said, man, it's going to be darkest before the dawn, but this is your buying opportunity of a lifetime. And I don't know if I want to keep personally looking at high interest savings investments. They're very intriguing for the short term, but eventually you're going to want to roll that over into stocks, and you want to make sure you're still cost averaging into these investments, especially on days like today when they're just so insanely discounted and yields are so absurdly high, guys. Now, you got to be careful, right? Obviously, buying individual investments, if oil keeps rolling over, yes, oil stocks might not rebound with the market. But again, if you're buying VOO, QQQs, your broader index funds or Canadian stocks or your banks or some of those, well, even Enbridge, I mean, I'd still keep cost averaging into them. I don't think there's anything wrong with them. But nonetheless, folks, just a quick live stream today. I think most of the time on the Eastern Standard Board, you guys are at what, 7:30-ish, and where I'm at, it's like 4:30. So I'm still sleeping in when the markets are open. It's a weird feeling. I missed the Eastern Standard Time zone, baby. But nonetheless, folks, just a quick update today. Got some more fun videos coming out. If you hit the bell notification button, I released a video and then privated it. So anybody that got the notification can watch that video before I release it on Sunday. But stay cool, stay awesome. And as always, folks, I look forward to catching you in the next one.